tuned into Midcap Masala, and yes, this is the show where we take you through all that is happening within the broader market space, and not just that, also talk to the managements as well. And today, all eyes are on JK Tyre because the company recently has completed the merger of their subsidiary Cavendish Industries into them, and towards the fag end of the last year now, they have announced this particular announcement coming in from the company that's effective 24th of December. But how is it that going to impact their financials and what all is happening within the tire space? Let's understand all of that, and let me welcome Mr. Sanjiv Agrawal, who is the Chief Financial Officer of JK Tyre, joining us. Mr. Agrawal, hi, very good morning, and firstly, Happy New Year to you and your entire team.
Thank you for inviting me, and very happy new year to all of you. Thank you so much.
Thank you so much for that. But Mr. Agrawal, let's start with your recent announcements. We will definitely look forward to your comments on the Outlook 2026. But the latest one, that is Cavendish merger, now being completed and effective as well. Help us understand firstly that with respect to 2026 year and beyond, how do you believe Cavendish merger to impact your financials overall? How is that going to help your margin profile as well as your top line?
Sure. So, this was a strategic acquisition of Cavendish Industries in the year 2016 from Birla Tyres, which was a part of Kesoram Industries Limited. And this was strategic in the sense that because we got access to the ready capacities when we acquired it for truck and bus tires and for two-wheeler and three-wheeler tires, and which was not with us earlier. And we got into the new segment as well. So this was basically turned around over the next few years, and this has been contributing in a big way to the total revenues of the consolidated entity today. And when we acquired it, it was generating only about 300 to 400 crore rupees of turnover. And today, this is approximately 4,000 crore rupees of turnover, and with a very good margins, as good as the parent company JK Tyre. And therefore, this is contributing in a big way to the overall revenues and profitability of the company. So this we thought of merging with the parent company because both the companies are into the same segment and same business. And we thought that this will provide the economies of scale as well as we can expand it further. And this will definitely bring in the scale, economies of scale and other benefits to the company and unlock value. So this we thought, and we got it done, and we announced this in the month of December last calendar year. And this is going to be very useful going forward.
Okay, so Mr. Agrawal, that sounds good. But while you were talking about the impact on margins and other financial metrics, let's talking about Cavendish in particular. Cavendish has moved to nearly 95% capacity utilization today. How much of this turnaround, if you could tell us, benefits, how much of these benefits they now reflect in your margins, ROCE and cash flows post the merger?
So this will be, in fact, this was a part of the parent company JK Tyre as a subsidiary company, and this was about 74% subsidiary. So this was in any case getting consolidated with the main company. But now because of the same business and the common network of marketing which we will be using, so this will give us some benefits in terms of the overhead savings, in terms of the interest cost savings, and so many other benefits which it will bring in. So this is going to improve our overall profitability margins and the economies of scale, as I said. So just to give you another major benefit which we had drawn over the last 8-10 years from the time when we acquired it, this has the company has grown at a CAGR of about 31%. So this is what we have been drawing out of this company, and going forward, hopefully, we will be in a position to expand capacities further and bring in more benefits to the parent company. Or now, because this is a part of the parent company, so it will help in growing the company faster.
But Mr. Agrawal, I believe that the Cavendish EBITDA margins were any which ways higher versus JK Tyre's consolidated margins. Can you help us with a number? Because we do understand the economies of scale, the synergies that will come in play. But can you help us with some number which you want to get with respect to your overall margins? How will Cavendish support into that, as well as your overall growth in the other financial metrics?
Yeah, definitely. So I believe that because two products which Cavendish Industries is into, the truck and bus radial tires and the two-wheeler and three-wheeler tires, so which are very good margin businesses, and therefore the margin contribution was a little higher than JK Tyre, main company. And also one reason was that because JK Tyre has been into the supplies of to OEMs, and therefore the margins were slightly lower comparatively. But now, because this company has got merged, so Cavendish will be in a position to contribute better, and probably the margins will improve by small percentage points.
Okay, and Mr. Agarwal, let's talk about your input costs. And given the way crude prices have been absolutely range bound, not much momentum over there, what has been the impact on your overall input cost? And is this favorable for the company that the crude has remained in the tight range?
Yes, definitely. In the last couple of quarters, we have seen that the raw material prices have remained softened, and by about 5 to 6% softening has happened in the last 2 quarters, particularly so on YOY basis. So we believe that this is going to contribute to the improvement of the margins for the merged entity and for the consolidated entity. And this is going to continue. The momentum of this is looking like for the next few quarters as well, with a downward bias on the raw material prices. The input costs are likely to remain stable.
Indeed, the input cost is likely to remain stable, but versus Q2 to Q3 now, Mr. Agrawal, any fluctuation in the RM cost basket, can you quantify that for us, if possible?
So this has been there, but to some extent, this has also got offset because of the depreciation of rupee. So majorly, I would say that there's not been much of a difference between the Q2 prices versus the Q3 prices, and in the raw material, because some part has already been taken away by the depreciation of rupee for the import part. So, but yes, the bias is downward, and raw material prices are remaining stable at the moment, at this point in time.
Okay, and Mr. Agarwal, talking about your debt profile, what steps are being undertaken currently to reduce the debt that the company has on the books?
So we have been continuously making endeavor to reduce as a part of our strategy, reduce debt, and we have already reduced debt from 5,600 crore about a couple of years ago to today about 4,200 crore rupees. And with this, a few expansions also have got commissioned, like the last one of rupees 1,400 crore have got commissioned. And in spite of that, the debt levels have got reduced. Now the profitability of the company on absolute basis has improved. The margins have improved. The turnover, the size of the company has significantly improved. So I believe that we will be in a position to reduce that going forward in a faster manner. So our strategy has been to remain on that equity level less than 1, and on debt to EBITDA level within a range of 1.5 to 1.8, which is quite comfortable. And I think this company will be in a position to improve the overall debt in a significant manner, as the company has been doing very well.
All right, we do take note of that, and we look forward to how your numbers improve in this particular year. But Mr. Agrawal, since it's the start of the year and it's the first day of the year that we are speaking with you, it's our pleasure. But give us your outlook for 2026 for JK Tyre specifically. What will be your key focus areas, and how can we see you grow? And which segments do you believe could be the outperformers?
So all these segments in the auto sector have been doing very well, particularly post the GST 2, 2.0. and this has given boost to the consumption, and a lot of demand is coming through in all these sectors of the economy, and which is giving good utilizations to the fleets and the trucks, and therefore there is a good demand for the truck and bus segment as well as in the passenger car segment, as we have noticed in the last couple of months. And this momentum, I think, is going to continue in the future as well. So we see that this year we will be definitely closing the financial year with double-digit growth, and hopefully this should continue in the next year as well. So we are very hopeful that all the segments of the tire sector, like the truck and bus, or maybe the passenger car or two-wheeler, three-wheeler, are going to perform very well in the coming quarters.
Okay, Mr. Agrawal, that sounds good. Thank you so much for your time today. Great speaking with you and wishing you and your entire team a very happy new year.
Thank you, and same to you. Thank you
Thank
all.
you so much. Okay, viewers, with that, time to slip into a very short break, just checking in with what the indexes are doing. Mid cap absolutely flat. The small cap index is seeing a dash of a red, about 0.2% lower, contrary to what the Nifty is up to right now. But on that note, time for a short break. Be right back with more on the broader end of the market on the other side.